afternoon. This meeting of the Shreveport City Council's Audit and Finance Committee is called to order. Because two of our members are late, we'll dispense with approval of the minutes for now, and I'll invite public comments at this time, if there are any. All right, seeing none, we'll proceed to discussion of the GFOA's Organizational Assessment and System Analysis Report. Mr. Whitehorn and Ms. Jones, I just would invite you, if you will, to discuss briefly the findings of the GFOA, explain to the public the period for which those findings were made, and give us a roadmap of how the administration intends to respond to the findings, please.
You want to take the lead?
Yes, in 2019, the administration reached out to the Government Finance Officers Association Research and Consulting Center, and it initiated an organizational assessment and system analysis. GFOA, of course, is a long-time organization. They were established in 1906 with a mission to help and support public finance at all levels of government. The city has been a member of GFOA for many years, and the purpose of the city reaching out to them was to gain expert observation and to kind of do a 360 assessment of all of the finance functions across the entire city, across all departments, and to receive recommendations from that organization that provides leadership in best practices with local government finance. GFOA, of course, has done this type of assessment for hundreds of municipalities throughout the U.S. and Canada, and the administration has started to work with them to look at the things that we need to move forward with, the priority of those, and whose responsibility that will take on each of these projects. We do recognize that these are recommendations that will take some time, but we've already started to make some steps in the right direction. A number of the things that we have started to implement already. Of course, GFOA has looked at across the board. It's looked at budget, it's looked at the accounting functions, it's looked at purchasing and procurement, billing, our treasury function, asset management, payroll, and risk management. Things that we've done, and I'll list some of these. One of the things that was mentioned was for the city to develop a closer relationship with our external auditor. And this is a process that got started in late 2019 after the discussions were had about the 2018 audit. And accounting staff has been working closer with the audit. We received permission from the internal audit office actually for the external auditors to move to the 6th floor, which is the finance department's floor, to do their assessments and do their testing. So that's provided a very good way for them to be closer to the accountants. Each division has started, and mostly all of them have completed standard operating procedures across the board. That is something that has been put in place. Cross training has been implemented across the board. We have employees now that are 2 or 3 deep as far as those that are capable of performing different functions, as well as the existence of the operating procedures provides for us to be able to make sure that there's continuity of operations. We've had working also from the grant aspect. We've assigned a senior accountant to oversee the city grant reporting and management. We are eliminating the manual process of producing the actual audit document. We have identified key departments and will soon formulate a key committee to guide the structure implementation of purchasing improvements. We have held initial meetings with GFOA, and we've received samples of full reports of purchasing manuals to be able to assist us with doing the manual rewrite. This is a process that, of course, once the new city attorney gets on board fully, we can start to proceed with working on this task. We reduced the number of paper and manual forms within the department, and actually due to the onset of COVID across the city, for that matter. Implemented digital timekeeping and digital supervisor time approvals. We've secured vendor files such that they cannot be removed from the file area. We've implemented policies for fuel man purchases.
We have had discussions with IT about transitioning to biweekly payroll. Of course, this is a process that is going to require a lot of time because it will require employees to adjust their personal budgets. We'll have to provide several months of notice, but this is definitely a long-term goal. We've implemented electronic payroll accountability forms for new hires. Risk management now participates with the department director meetings. And we have increased the overall awareness of their participation as a citywide risk manager. We now have a payroll manager that is reporting directly to the city controller. We developed and working on developing a report within our accounting system that will automatically identify contracts when they are coming due to expire. And then we're also working with the revenue division to implement a number of processes to be able to help us with our payment functions. So there's a lot of work to be done. Of course, we acknowledge that, and we're starting that process and taking a step at a time. Our next step is to continue to work with GFOA regarding implementing a full action plan to be able to start to do kind of like a time and responsibility schedule.
Ms. Jones, I appreciate that report, and I have to again commend the administration for inviting GFOA to conduct this assessment last year. An organization the size of the city of Shreveport cannot properly address its problems until it knows what those problems are, and GFOA's report is comprehensive, and while it does identify numerous very serious deficiencies in the operation of the finance department, it also, I think, provides us a roadmap for moving forward. And I'm confident and hopeful that under the leadership of Mr. Whitehorn and Ms. Jones, the finance department will continue to improve the quality of its operations and will eventually, after considerable effort, I suspect, reach a point where we all have full confidence in its ability to manage the hundreds of millions of dollars for which it is responsible. One of the particularly concerning findings from my perspective, Ms. Jones, in the GFA's report was the suggestion that the finance department had, at the time of the evaluation, a lack of organizational accountability. Page 4 of the report states that the city suffers from a lack of staff being held accountable for their job duties and responsibilities. And consistent with that observation, on the same page, the report indicates that a number of city staff from various departments and functional areas provided examples of when efforts were made to implement beneficial changes to finance-related processes, only to have these efforts stopped by department pushback or department fear on how their staff would respond. As a member of the council, and I'm sure I speak for all my colleagues, I certainly value and appreciate all city employees, but when I read in a third-party report that employees of the finance department are dragging their feet, or in some cases perhaps actively impeding reforms that would benefit the city, that concerns me. I'm confident, Ms. Jones, in your leadership of the finance department, but I hope that the next evaluation of the finance department does not reflect this concern. You've addressed the fact that the finance department is in the process of implementing a procedure manual. In other words, having written policies and procedures for what it does. When do you expect that work will be completed?
It's mostly complete.
It is mostly completed.
The audit right now, we received an extension. It's required a tremendous amount of bandwidth from employees. So, once we can get it done, then we can finalize the accounting procedures. But otherwise, we've got everything else in place.
And will the end result of that effort be a single procedures manual that the council could review?
Of course, it's it can be available. It's separated by job function, so that someone who is picking up a particular task can have something to follow. And this is not specific to the accounting department. I mean, finance department. This has been a directive that came from the mayor's office back in 2019 for all city departments.
Another big picture observation of the GFOA report concerns the manner in which the city conducts its budgeting. And the report's description in part of that process is that it is centered more on aggregating department-developed budgets than discussions on what the city should and should not be allocating funds towards. And my appreciation of that statement is that we ask departments every year to build a budget based on the previous year's budget, but we're not stepping back as the principals of the city, and in that group, of course, I include the two of you, Mr. Wadler and Ms. Jones, the mayor, members of the council, and having big picture discussions about how we're going to allocate the resources that taxpayers entrust to us. And so inertia year after year is moving our budgets forward, and perhaps we could do collectively a better job of having high-level policy discussions about where we want to use the public's money and where we don't. Do you think that is a fair concern that the GFOA has made about our budgeting process?
I've had lots of conversations with GFOA about that particular subject. You know, specifically a way to step back and be strategic. Of course, you know, that will require some strategic planning first to kind of get an idea of where the administration, the council's overall goals are. Also, you know, looking at a budget that potentially starts from zero. The challenge that, you know, we have been discussing is the fact that, you know, a significant part of the city's budget is allocated toward personnel and benefits, and very basic things that, if the city did want to reallocate those resources, it would be difficult because, you know, basic employee salaries and benefits and basic services depend on it. So yeah, we've had a lot of conversations about that, and then ultimately, you know, they have recommended that, you know, some strategic, of course, you know, approach would be necessary, you know, and maybe looking at a multi-year approach to do a combination of, you know, revenue sources and scaling back to be able to get to a level where the city actually has control over being able to determine where it wants to go versus, you know, so much of being allocated to those basic, you know, moral obligations and legal obligations.
Let me add a little something to that as well. With the COVID pandemic, we have had to make some of those necessary changes. No longer are we just looking at last year's budget and saying this is the number that we're going to push out this year. We've made those modifications. So there is still a little pushback. Some of our departments are concerned about the amount that we have allocated, you know, at the starting point for the budgets, and we're having to look at that. But change is difficult, as you know. People don't like change, but we have made those modifications to try to make sure that we've got first of all, a good position-based budget. A lot of those positions we had to go in and clear up to make sure that we were actually funding those positions, not just what was on paper. We wanted to make sure we had bodies in those positions. In addition to that, you know, we had to make some drastic cuts just to be within budget for this pandemic. And so that was our starting point, what we had requested the departments to cut, and that's what we're looking at continuing to. We are going to have to, you know, we couldn't do anything with public safety because council said don't touch public safety. So they're starting with what they had last year, but the rest of the departments are not.
Mr. Warren, I appreciate that, and I think it's important for the public to hear, you know, as we have a conversation about public safety compensation and the possibility of needing a bit of additional revenue to meet that need, that the administration and the council are looking for opportunities to cut where we can.
Yes, correct.
That is very much part of the process, day in and day out at Government Plaza. And so, you know, for those who pay sufficiently close attention to the business of the city to watch a streamed Audit and Finance Committee meeting, I want to say that and just assure you that we are all very willing and eager to cut what we can, but we're also committed to collecting sufficient revenue to provide the basic services that we're obligated to provide to the citizens as your local government. Another issue that's raised in the GFOA report is the Finance Department's failure to fully utilize the New World accounting system. And I confess I don't have the technical proficiency to fully understand all the ways in which the GFOA says we should be using that software that we are not, but is that an issue that we are also addressing, and do we intend to make full use of the software that we already have?
Yeah, that is a concern that we've had, and this was a concern before GFOA brought it up. There are modules in New World that employees are not trained to use, modules that, I guess the switch may have not been turned on, or we don't know if we have, capabilities to use. So that is additional conversations that's being had with GFOA and IT to determine where the priorities are, which other modules within the system that we need to turn on and start using.
One particular example of that which GFOA offers in its report is the fact that the city, according to GFOA, does not currently perform any significant receiving or matching of goods or services, with the exception of water and sewer and some other departments. I understand that observation to mean that we are not consistently making sure that we have actually received goods and services before we pay for them. And the report specifically identifies that as a risk of failing to perform matching. It says it leaves the city at risk for paying invoices and vendors for goods or services it never actually received. That sounds like a basic failure of financial controls. Is that something that you intend to address or have addressed promptly?
Yeah, we don't have a central purchasing department that in each department, each division, and I don't know how long this has occurred, handles their purchasing separately from the finance department. So, this is something, of course, that would have to be, there would be need to be some very broad conversations on how logistically, the departments handle their purchasing or receiving, and how to be able to find a centralized, place to confirm, what they've received.
Well, I'll say for myself that I'm certainly open-minded about reorganizing the purchasing process to ensure that we're providing the matching that GFOA of goods and services that GFOA says we need to perform to ensure that we don't pay for things that we have not received. I had a contractor recently give me a particular example of a procurement failure, apparently, and I haven't confirmed this, but I was told that prior to this administration taking office, there were numerous instances in which the water and sewer department overpaid contractors for work on the consent decree, and sometimes contractors catch the error on their end and give the money back. But on at least one occasion involving 7 figures, the contractor, and I don't know the name of the contractor, I would have called your office already, Mr. Whitehorn, but the contractor received 7 figures and didn't give it back. And so that stories like that concern me. And it goes back to the idea that we need to be able to demonstrate to the public that we are, as a finance department and as a city, managing the money with which we're entrusted prudently. If we're not doing the sort of bookkeeping that allows us to ensure that we're paying what we're supposed to pay and that we're actually receiving the goods and services for which we're paying, then we can't accomplish that. This is a relatively small issue, but it has been discussed in other contexts. We require affidavits for all vendors to be approved. GFOA identifies that as sort of a cumbersome step in the procurement process. And I'll just say, Ms. Jones and Ms. Whitehorn, I'm open-minded about revising that process. Perhaps we could require vendors to make the same statements unsworn but under penalty of perjury, so that they can do it as part of their application rather than having to find a notary. That can be a cumbersome, difficult thing to do, and apparently it was sufficiently significant for GFOA to note it in this report. It says that it often delays approval of purchase orders by weeks. Last year, or maybe earlier this year, several employees were federally indicted for stealing hundreds of thousands of dollars using fuel man cards. Those indictments, those criminal prosecutions are pending before the federal court in the Western District. This report indicates that fuel man purchases are supposed to be reviewed by supervisors on a weekly basis and signed off on or approved, but supervisors are not doing that as of the effective date of this report. Has that problem been corrected?
Yes, that has been corrected. We did observe that, that we were not receiving signatures that confirmed that they were being reviewed, but that was put in place last year.
You mentioned in your opening remarks, Ms. Jones, changing the frequency of payroll to biweekly from semi-monthly. That's a change that GFOA indicates would have a significant positive impact on the city of Shreveport. I understand that there may be some logistical challenges and some planning on behalf of the city on behalf of its employees to get that done, but I hope we'll do that as soon as possible. It won't cost the city, well, there may be some administrative costs to making the change, but going forward, it sounds like that's something that would improve our operations and would not be a significant cost.
That would be something that would be helpful. One of the things that I'll note is, one of the barriers right now that we're still trying to figure out is the fact that after discussing with New World, the accounting system, and they've indicated that each employee record would have to be changed manually to make that transition. So, how to do that, for each city employee and make sure that it is correct, is something that we, have to talk through more with IT to figure out how to get that done.
Do you have a sense of the timeline for that transition? When could we reasonably expect to accomplish that change?
This year, definitely, I don't expect that. We need to figure out how to handle that, because to manually touch each employee's record to, ideally this is something that could be done on the back end, through IT to maybe write a script or something, but to have to do it manually is something that we need to talk through more, just to make sure that it's right, and who would be able to do that for each employee. So we need some more discussions to figure out how to make that happen.
The final finding of this report, concerning which I'll comment this afternoon, is that GFOA notes that the city has been in the practice of paying exempt employees overtime, and specifically on page 35 of the report, GFOA indicates that exempt employees are not entitled to overtime pay under the Fair Labor Standards Act. Although there are many instances where this practice occurs in the city should update the policy related to exempt employees and overtime to reflect federal standards related to pay. Similarly, the city should also eliminate comp time for exempt employees as well. Talk to me about the background around this, please. Are we paying employees overtime who are not legally entitled to overtime, which is what that seems to suggest?
Yeah, this is an item that would have to go through the HR board, because the HR board sets this policy, and GFOA has noted that this is not a common practice with other municipalities, and the HR board would need to basically have this discussion and address this through their board members.
Well, I'll say that in my experience in the private sector, exempt employees are never paid overtime. That's just not part of the deal that an employer strikes with exempt employees. And I would welcome the administration urging or encouraging the HR board to take this action. The city's budget is sufficiently constrained that we should not be giving away the city's money. And if we're paying people overtime that aren't entitled to it, then that is potentially what we're doing. Councilman Butcher?
I think you covered it all.
I thank you both for this discussion regarding the GFA report. I would appreciate a quarterly update at Audit and Finance Committee meetings on the city's progress toward addressing the deficiencies the report identifies until we have reached the end of that process. And so I'll continue to put this on the agenda for these committee meetings for the next several meetings at least. Thank you very much. All right. Next item on the agenda is financial controls. I believe we've covered that. The third is the Finance Department investigation, which was authorized by Resolution 88 of 2019. I think it's useful to keep that investigation open in case the committee's assistance is needed with investigating or addressing any particular deficiencies that the GFA report identifies. But I do think that the report we've just discussed is a very thorough accounting of the Finance Department's challenges. And so I do not anticipate that the committee at this time will take further action on that investigation, but it is going to retain the authority to take action if that becomes necessary in the future. Ms. Stewart, you have several audits and projects from last year to discuss with us, and I invite you to do that now.
Thank you, Mr. Chairman. The first audit that we want to review is the audit of the City of Shreveport financial condition. And this audit actually analyzed the city's financial data over a 10-year period from 2008 to 2017. Most of the work we do is kind of a historical perspective, and so that is what this entails.
Would you adjust your microphone, Ms. Stewart? I can't hear you very well up here. Thank you.
Our report, can you hear me now? Okay. Our report presented information in 6 key areas of financial operation to identify opportunities for improving budgeting and financial management. We'll review the first 5 of them in our presentation today, and I will say that all of this analysis came before the pandemic, but we believe most of the principles that we included here still are relevant and still hold, even despite these unprecedented times. Revenue determined the city's capacity to provide services, and diverse revenue sources will help withstand changes in the economy. Our general fund is heavily reliant on 2 revenue sources, the sales tax revenue and property tax revenue. We'll discuss sales tax revenue initially. Sales tax revenue increased an average of $1 million per year, actually over the period of 2008 to 2017. The chart to the right just shows the last 3 years, and sales tax revenue contributes about $120 million to the general fund on an annual basis. Property tax revenue contributes about $55 million on an annual basis, and over the period of time that we looked at, it decreased about an average of $158,000 per year because of millage reductions. I guess the big takeaway from that is sales taxes are a little bit more volatile to the general fund than the property tax revenues. We are aware of the unassigned fund balance. We've talked about that extensively, but this chart underlines the fact that the fund balance has declined despite transfers from the riverfront, streets, and other funds. And the trend shows, again, the decline. One of the things that we did point out in our report is that if there's a decline of more than 3 years, that signifies that there is an area of concern and an area to watch, and certainly this falls into that category. Budget to actual revenue. Basically, this chart shows that this has been at a deficit over the past 5 years. Now, this does include total revenue, not just the general fund revenue. And it also explains that it excludes transfers. So if there is a transfer from, say, the riverfront to the general fund, that's only included one time. So overall revenue budgeted to actual has been at a deficit, certainly over the last 6 years or so that we did our analysis. Possible explanations for decreases in revenue, the loss of the General Motors plant. As we've discussed, property tax decreases because of the millage rate. Sales tax revenue decreased in some of the years. And 2016, the Shreveport-Bossier MSA labor force reported a reduction of about 4,300 people, certainly probably spurred by the loss in population that we are all aware of. So what are our recommendations? Our recommendations were to monitor revenue and make appropriate reductions to expenditures. We documented on a quarterly basis. I will say that the budget has been recently adjusted because of the pandemic, and we're just asking that that be done on more of a periodic basis as needed. We also recommend that when decline appears to be a trend, that trend we noted was 3 years or more, that we consider whether spending can be reduced or revenue can be increased by any of the following. Improving revenue collection procedures. We'll note in some of our audits that we'll discuss later that there are some things on the books that we could potentially be collecting that we are not at this time. Reducing tax delinquencies, if there's any room for that, and instituting or increasing service fees, fines, penalties, licenses, permit fees. We don't have any taxes on there, but that certainly could be a viable option. I know that last part C has been brought up in relation to the public safety salary discussion. So, you know, that certainly is a good viable option in terms of that. A recommendation in terms of the budget to actual, this would be more of a conservative way of budgeting. Consider a policy of budgeting 98% of actual revenue from year to year, and that would potentially reduce the deficit that we discussed earlier. Financial indicator number 2, expenditures. Area of information, the average expenditure increase has been about $100,000 more than the average revenue increase over the period of time that we looked at. In 3 of those years, the expenditures were significantly more than the revenue. Ms. Jones brought out earlier about the salaries and the contribution that they make to the expenditure, representing about 2/3 of the general fund expenditures. We'll note that retirement contributions were the primary driver of any salary increases, and not necessarily raises, but retirement contributions. And the chart to the left shows the plans and the increase in salary, the increase in retirement contributions over that 10 years. Our recommendation is to determine if expenditures can be reduced by any of the following: consolidating services, cross-training personnel, or utilizing information technology in better manner to see if there can be efficiencies in operations. Financial indicator number 3, we talked about the unassigned fund balance. It's been a goal, an informal goal, to have the fund balance at 7% of operating expenditure. But the 10-year average has been about 3%. And as of the last year that we looked at our data, it was less than 1%. And that's outlined by this chart. And it represents the dollar amount for the unassigned fund balance.
What was it, 0.08%? Ms. Stewart?
Yes, less than 1%,
So-
$200,000.
Way less than 1%.
Yes,
Yeah.
yes, 0.08%. We have talked about this. We actually, I think, talked about it at our last committee meeting, possibly adopting a formal minimum reserve policy by ordinance and implementing it with the budgeting and planning. Ms. Jones has brought up the fact that doing that formally would probably be more of a negative in terms of the credit rating of the city, since we don't meet it, versus the informal policy that we have, that we are not meeting at this point. And so our recommendation would be just to build up toward meeting that, that informal policy of 7%, and at some point during the ordinance, so there can be some accountability for maintaining that reserve amount. We also recommend establishing a separate contingency reserve of about 2% on top of the 7% for things such as emergencies, for any budgetary adjustment. Again, when we did it for the pandemic, this would be available, for those circumstances, and to meet unexpected small increases in service delivery costs. This notes some good principles for debt for a city. I would note the third bullet that a local government's debt should not be used to balance the operating budget. This is somewhat in opposition to actions that the city is currently considering, but just a note that this is a good principle, certainly in normal times, that this is a good principle to follow. In terms of the city's bond rating, some of the factors that influence that, the debt per capita has been increasing, and you'll note for 3 years, definitely it's been increasing. And one reason is because the city's population has been decreasing. The per capita income has been stable or slightly decreasing, but the region's income has been increasing. And so all of that factors into what our bond rating has been and the downgrade that occurred because of it. These are some factors that could lead to an upgrade, factors as well that could lead to a downgrade. One positive note is that about $21.5 million in bonds will be paid off in 2020, which should be a positive toward our bond rating. Recommendation is just to increase the operating reserve to offset local governmental debt per capita. A lot of times, if you do one thing on one of these financial indicators, it'll help in another, and so that's one of the examples. The last issue that I wanted to review is the unfunded liabilities. Just some definitions of what that is. The accrued liability is the current value of future pension costs. The unfunded liability is just the deficit in our pension system. And the funded ratio is what percentage of future costs does the system have. What we noted is that the unfunded liability increased by about 61% from 2008 to 2017, and ideally that number should be decreasing. Although assets increased by about 35%, liabilities grew 2 times as fast as that, resulting in what we see as our current funded ratio. Again, this was in 2017, of about 47.5%, which falls into the severe distress category according to the the standards that we saw.
And that funding ratio has gotten worse since 17, has it not?
I would think so. The city did have a contribution schedule to increase the assets. I think it has been following that to improve the condition of the system. However, we think that at some point there's going to have to be, again, some conversations about it to ensure that it is stable and viable going forward. We had Ms. Jones to respond to our report, and if she has any comments.
I'll answer any questions.
Okay.
If there are any.
Well, we've, of course, the council and the administration have seen this report before today. We've discussed it. Ms. Stewart delivers it with the calm, cool collectedness that is sort of part of her personality, but it really is a fairly dire description of the city's finances, and I don't say that to suggest that we should throw our hands up and walk out of the room, but I do think we all need to understand that it's going to take a great deal of work and commitment from all decision makers to dig out of the hole we're in. We have had discussions in recent weeks about the possibility of the city borrowing $35 million to pay operating expenses, and the reason that we're having that discussion, and I would say that the administration has been forced to consider that as a possibility, is that we came into office with basically no operating reserve. 0.08%, as Ms. Stewart said, is $200,000 on a budget of hundreds of millions of dollars. We have to find the collective discipline not to spend more than we take in, not to spend so much that we are down to our last dollar, but that's where we find ourselves today. I think it's also worth noting the very significant pressure that pension obligations place on the operating budget. I have said before, and I will continue to say for so long as I hold a seat on the council, that I'm very concerned that we are making promises to employees and future employees in terms of pensions that we are not going to be able to keep. And I don't mean that any existing retiree is not going to receive what they've been promised. I believe that they will. I don't want my remarks to scare anybody who's already retired. But I'm saying in the long term, if we don't change something, the numbers are not going to balance out on that non-public safety pension. We can't contribute, in my opinion, more than we are contributing from the general fund budget to the pension system. We don't have the money. It's already a tremendous burden and pressure on the budget. And so the only alternative is going to be in some way to reduce the cost of pensions for future employees. That's a difficult conversation to have, but it's one we absolutely have to have if we're going to maintain the city's fiscal stability. Councilman Butcher, Council-Lady Fuller.
There's one question, Chairman. On the per capita debt, is there an amount as far as how much each citizen owes in debt for the city's debt?
Yes, I do have that. Starting in 2008, it was $875, and now it's $1,085.48. Remember?
So $1,085 per citizen debt for the city's debt.
Yeah, 800, started in 2008, it was 875, and for 2017, it's 1,048.
1,048. Okay, thank you.
The only other comment I'll make regarding this report is that Ms. Stewart has pointed out for 6 years covered by this report, the city missed its revenue, budgeted revenue, all 6 years. And what that means is we budgeted for a certain amount of money that we thought we were going to take in, and we took in less every single year. It's important that we have revenue budgets that are as accurate as possible so that we can make good decisions for the public about how to spend the money. If we make decisions about allocating resources based on bad numbers or inaccurate numbers, then we'll be forced to make midstream adjustments. And so we talked about at some length this afternoon the efforts that the finance department is making to improve its operations, and I'm optimistic that those efforts will bear fruit. But this is a particular example of where the budgeting process has not worked well and has not served the citizens' interest historically.
Councilman Nicholson.
Yes, sir.
I just want to make a couple comments.
Certainly.
Because I too want to echo the administration's desire to enhance our operating reserve. We are working diligently to try to make that happen. And it appears that with this budgeting process, we will see some increase. However, I want to point out that, and this is good data, but the data is dated. This is the last information on this report is 2017.
Yes, sir.
So I want to make sure that everybody is aware of that as well. And I'll assure you that those concerns are ringing loudly in the administration. And so we are working to make this, the next report, much, much better. But along with those unfunded liabilities, we also need to consider the unfunded mandates. And we have to be able to figure out how do we strike that balance, because we're asked to do more and we don't have the funding, but we also have those unfunded liabilities on top of that. So just keep that in mind as we talk through and try to figure out a best path forward.
Well, Mr. Warren, I appreciate those remarks, and I will say again, lest there be any confusion from the public, this report and all the concerns that we're discussing this afternoon arose under a prior administration. None of this has anything to do with anything that has happened while Mr. Whitehorn has been CAO or while Mayor Perkins has been mayor. But as Mr. Whitehorn knows, we have inherited the problems that we have inherited, and we're now responsible for addressing them. So my goal now and always is to work in a constructive way with the administration to the very best we can for the public.
Yes, sir.
All right, Ms. Stewart, next
Councilman
report, please.
Nicholson, I do want to correct what I just told Councilman Butcher. That was the per capita expenditure. We don't have the per capita debt, so we will get that for you.
Okay, thank you.
I'm afraid that the per capita debt number may be higher, Ms. Stewart. Yeah.
Is it on page 24? Is it the net direct debt per capita? On page 24?
Yeah, I don't have the full report. We just have the PowerPoint. Okay, are we ready to go to the next one? Okay. The next audit that we will review is the performance audit of the City of Shreveport insurance procurement. And we were asked to look at the procurement process because of changes that were made to the insurance and the broker at the end of 2018 for the year 2019 coverage. We were asked to understand how and why the changes were made and the impact of the changes on the city's property damage risk. We issued a report in 2019 identifying that the initial $50 million in coverage was insufficient relative to the total replacement cost of the assets. And so the administration did procure additional layers of coverage, bringing the total amount to about $300 million. And so this report looked at that $300 million in property coverage, as well as some of the other insurance. In reviewing our work, we did utilize the work of a consultant to help us kind of analyze things before the change and after the change. One of the things the consultant identified was that over both of the years that the insurance companies had sound financial standing with a stable outlook or better for both of those years. So that certainly was a positive. But in terms of the actual makeup of the companies, before the change, there was only one company. But after the change, it was 3 layers, 7 policies with 7 companies. In addition to that, with the company that was before the change, that company was a Louisiana admitted insurance company, and participating in the guarantee fund, and it provides claims processing in the event of an insurance company becoming insolvent, but only one of 7 companies after the change was a participant in that fund. In addition, because of the multiple layers and multiple companies, the consultant thought that provided greater risk in terms of coverage gaps by conflicting language, coverage gaps because of policy language interpretation differences, and potentially coverage gaps due to any one of the 7 insurance companies becoming insolvent. Some of the highlights from the actual policy change, $622,000 more in premiums for $515 million less in coverage, $25 million less in earthquake claims coverage, certainly something that's less likely, but again notable as far as a policy change. There were higher deductibles, about $25,000, and one of the finer details of the policy is the undamaged portion demolition coverage. It just provided less generous terms for that type of coverage. A recommendation is that because there was a lack of competition in procuring this insurance, and because of the broker's relative inexperience in placing insurance coverage, there were some things about it that we thought could be improved. We thought, number one, that when you go out and change insurance, that you issue an RFP and make sure that the municipal broker has municipal experience and that the insurance company is a Louisiana admitted company. We also recommended that when you retain the broker, that insurance quotes be a part of the RFP so that you know the quality and the level of the insurance that you're getting when you retain the broker. Some of the things where the process was not followed, we did think the state law required an RFP. We thought that the city policy conflicted with the state law regarding this because the city policy was a bit more flexible in allowing the CAO to determine if an RFP was allowed, but the state procurement code mandated the RFP in cases where there's $50,000 or more in insurance costs. We thought that there was some ambiguity in oversight of the risk management process that kind of oversaw the insurance, and that position was moved under the city attorney, but the actual oversight of the insurance still was retained by the finance department. And because of that, that allowed some ambiguity in that process of supervision. We also noted that the direction to change the insurance broker came from outside city government. So we're just recommending that the RFP process be followed, that risk management be returned to the Department of Finance. We thought that it was better suited under the Department of Finance. I do think the GFOA report asked that that be delayed because of the newness of the executive level personnel at the Finance Department, but maybe that could be something that's down the road. And we recommended that the purchasing policy be aligned with the Louisiana Procurement Code. And that's all for that report.
This report has been the subject of much reporting and public discussion over the course of the past year. I will just say again, as I said before, that I deeply appreciate as a member of the council the excellent work the internal audit department and you in particular did on this issue for the reasons that you've described in your report. There was a period last year during which the city was very significantly underinsured. And, you know, as we sit here today, a hurricane is headed our way, and that's just an example of the risk that we could have faced during that time period that would not have been insured. I'll also note that the administration implemented your recommendation and employed an RFP process to select an insurance broker this year. I appreciated that. I was pleased by that change. And I hope that we will continue to employ RFP processes to select the professionals who do the city's business. And if I could wave a wand, of course, I might require RFPs or RFQs for all professional services. But at least if we're doing it with insurance brokers, we will not have to worry about suffering a catastrophic claim that is not covered. So thank you very much for your work on this matter. Councilman? Councilwoman? Okay, very good. Next report, please.
Excuse me. The net direct debt per capita, which is debt exclusive of, debt from a revenue source like water and sewer, is $1,132.
Thank you.
If you add water and sewer, it's about $35.
Oh, if you add water and sewage, 3,500,
That's what you said, Councilman, $3,500 a person.
and that's for those general revenue bonds.
Yeah, but your main concern would be your net direct debt, because the water and sewer bonds are paid out.
Right, you're paying it out of
your
your,
revenue, right?
yeah.
So we're not taking public comments at this time. If we have time at the end, I may let you speak.
No, that,
I'm sorry?
that's,
Oh, I'm so, you have a mask on. I'm sorry. Please, yeah.
I'm the city risk manager, I'm not,
Okay, I just didn't recognize you. I apologize. How are you, sir?
I'm fine. I wanted to comment on the insurance procurement process.
All right, very good.
Do I need the mic? or-
Why don't you walk up to the microphone so that we can hear you and the public can hear you?
All right.
My name is Mr. Hunter. I've been in the insurance business for 46 years now. Been a risk manager for one of the largest big box companies in the world, Dollar General. What we need to understand is that the city is still underinsured. I did an audit of the insurance for the city when I came on board in January 29th. $300 million is still not enough insurance coverage. The city has assets over $2 billion. About half of that is the city's property. And so right now, I have sent out RFPs to brokers to price that. When I came on board, I realized that the city had $800 million in property insurance coverage. That was through Lexington Insurance, which is a part of the AIG family. The insurance market is drawing back from writing property coverage. And the reason why is that there's so much risk out there for property. In the state of Florida, most of your major insurers pulled out, and they have a public entity that's run by the state. It's called Citizens Insurance Company that writes property insurance. You may be seeing that happening in Louisiana because our state is in the Gulf. I have worked as a stormtrooper for 30 years handling large commercial property claims. We have a Cat 3 hurricane in the Gulf now that's headed for this state. It's probably going to do billions of dollars of damage. I encourage you all to read an article, and I'll point it out to you. It's by Business Insurance, and it's property insurance markets hardening for 2020. I encourage you to read that article, and you will understand why we have 7 layers of insurance. It's my understanding that the first layer of insurance started at $25 million, And that's why we're paying more in premiums, and that's why we're getting less coverage. These companies are not writing property insurance anymore. They are afraid of it because we're having more storms, and the storms are more severe. Another issue of why that is so, why the companies are pulling back, is because their investment incomes are low. The return on investment is very low. The Treasury bond now is less than 1%, it's 0.64%. It's not even 1% anymore. So your return on bonds is low, you turn in the equity market is low. So insurance companies' premiums is, when they pay claims, they're losing money. So the market is hardening for property insurance. So that's why I want you to understand. There is another option we could go for the city, and this municipal pools. There are several risk pools all over the country. Tennessee has one. It's called Tennessee Municipal League, and there are about 95% of the municipalities in the state of Tennessee is in this risk pool, and that's where all the money is pooled together, and the money is shared among each municipality. There is a municipal risk pool in the state of Louisiana. That might be another viable option for us to reduce our costs of insurance, but increase our coverage. We only have $300 million in coverage. One thing we also need to consider too is that $300 million does not have any co-insurance provisions in there. So what I mean is that you have to look at probability, the probability with the city having over $1 billion of property assets. What we're looking at is we have almost 1/3 of the coverage that we need. But we have to look at probability of all of the assets being destroyed at one time, and that's a very low probability. So in essence, you can say the $300 million may be enough with no insurance provisions. And if you don't understand co-insurance, what that means is if you have a building that is insured for $100 million, and the cost to repair it after a storm is $200 million, then you're underinsured. Then you have a co-insurance penalty and you receive less. So the city does not have any.
Mr. Hunter, I appreciate your remarks. I'm going to cut you off because we have several other reports to get through
I
at
understand.
1:30. But I'll just say my goal is for the city to procure the coverage that it needs
Right.
with the help of well-qualified professionals, and I'm very open-minded about how we do that, and I look forward to having a conversation with you soon about how we can
Absolutely,
accomplish
and we're in the process of as we speak, of procuring insurance for the city. I've ran evaluations on most of the major properties for the city, and they're with brokers as we speak right now, sir.
Very good. Thank you so much.
You're welcome, sir.
All right. Ms. Stewart? I'll just invite you to move through these as precipitously as you can so that we can meet our 1:30 deadline, Ms. Stewart.
Okay. The next report is a audit of the payroll and payroll tax reporting process. And we did this report as a part of a request by U.S. Chairman to review the Finance Department after the external audit findings that were reported related to the payroll tax penalties that were assessed. We were asked to just determine exactly the amount of the total amount of the payroll tax penalties. And we also did a high-level review of the controls that were related to the payroll. One of the issues that we believe contributed to the payroll tax penalties was an unreliable payroll system. And this graphic kind of gives you an idea of that system. Timekeepers post to the timekeeping system. It's sent to the payroll manager, who reviews it. If there are errors, the errors are then returned back to the timekeeper, who updates information. Once that process is finished and there are no errors, the payroll is run, paychecks are produced, and the payroll tax is paid based on those paychecks that are produced. Now, after the tax is paid, there could be changes to the payroll in the form of manual checks and check voids. Manual checks happen outside of the normal processing run, and when they happen, it makes it difficult to keep up with when the associated liabilities are due because of the different dates that they are due. So they are due outside of the normal processing run, and generally these checks are a lot smaller than what happens in the normal processing run, and the dates can be varying throughout that time, and so keeping up with that creates some difficulty. Voided checks as well also create difficulty in the payroll tax reporting because the system is not able to recreate a complete and accurate tax liability report once a check has been voided. And once it's voided, it's like the check was never there. And when you go back and try to run a report, it's hard to reconcile the taxes that were paid to a report that was run after the fact. Our recommendation in terms of the manual checks is that there be a deadline for getting those in, making sure that you verify that all tax liabilities are accurately reported, and make sure that when the manual checks are done, that they are deposited according to the correct IRS schedule. Another reason why the penalties were assessed was because the liability report for the federal part of it was not guaranteed to place the liabilities on the correct due date. Sometimes it placed it on the processing date, but the IRS required it on the pay date. And so when that happened, what happened was the former controller was not really reviewing the report. If it was reviewed, it would have been caught at that time and not sent to the IRS, who used the processing date as the pay date, and because of that, the penalties were assessed. So if it would have been kind of corrected before it was sent, the penalties never would have been incurred. From the state perspective, the Director of Finance did not file 3 quarterly reports by the deadline, and that resulted in assessments of penalties. However, the city should have been registered with the Louisiana Department of Revenue as a governmental agency. If this would have happened, we never would have gotten assessed the fines. When that was discovered, the city of Shreveport did update their records with the revenue office, and all penalties were abated and the payments were refunded. So as a final note of report, the total penalties that were assessed were approximately $400,000, abatement and refunded approximately $350,000. There were some at the time that we did our report that was pending about $30,000, which resulted in a net penalty cost of about $30,000. I think there was, subsequent to the time that we did our report, some additional abatements or refunds that actually reduced that amount down even further. Recommendations: the controller maintain a permanent record of payroll. Director of Finance ensure that reports are submitted by the deadline, and that there be policies and procedures for this process. And I think we have Ms. Duncan and Mr. Hebert here who responded to this report.
Thank you,
If
Ms.
there are any
Stewart.
questions.
I'll just note that this report documents yet another failure of the finance department to properly perform its function under the prior administration. As has been discussed publicly, if an organization our size is not filing its payroll tax returns on time, then there's something very wrong with its operations. And as Ms. Stewart just noted, with respect to the state penalties, we didn't file forms on time, we were assessed penalties, and we paid those penalties even though we were exempt under state law from paying penalties. So it was error compounded by error. I'm confident that the problems that resulted in the deficiencies identified by this report have been corrected. But as I will continue to say to the public, we have to have a finance department that does its job well for the public to have confidence that we are managing its money appropriately, and failing to pay your taxes on time is one example that something is amiss with your finance folks. So I don't expect this problem to be repeated in the future, and as I've said with respect to a previous report, I very much appreciate the diligent work of the internal auditor and her staff in identifying this error. Ms. Stewart?
The next audit report that we want to review is the request for proposal process. And this is a solicitation method used to seek sealed proposals for goods and services. The contract is awarded to the most advantageous and responsive bidder. The dollar threshold is $25,000. We looked at RFPs for years 2017 to 2018, and 18 were awarded for about $7.5 million. In terms of the actual information for the RFPs, we noted that the files were manual and inefficient to review. In addition to that, the information contained in the files were inconsistent. Some things in some files were not in the others. The operating procedures that related to this process was outdated, and there was some redundancy in approving the contracts that were associated with the RFPs. The process required the contract to be routed manually as well as electronically, and we thought that was kind of a duplication of effort. We're just recommending that management update, digitize their RFP files, certainly in light of the pandemic, and showing how important it is to have digital records so that you can work generally from anywhere. Manual records sometimes makes that difficult. We also recommend that they update their standard operation procedures manual to make sure that they are following the current practices that they are working with, as well as eliminate the contract routing form that's done manually and do it electronically only. We also noted that there was no standardized process for uploading documents related to the contracts associated with the RFPs to the financial system. There was no alert in the system to notify that a contract is about to expire, and so another RFP was needed. And there was no mandatory field to select the type of solicitation used, whether it was an RFP, an IFB, RFS, or RFQ. And so you really couldn't query the system to get all the RFPs. And so it just made our process of selecting the RFPs a little bit more difficult. We're just recommending if an alert can be set in the city's financial system so that a report can be generated for expiring contracts, and to see if a field can be added or changed in the financial system to determine the type of solicitation methods used. That would just be a little bit more efficient in terms of reviewing the process. One of the other things that we noted is that when the award letter was sent out to the winning person, it did not always reflect the accurate process. In some instances, it noted that the bidder won because they were the lowest bidder, but that is not how the RFP is designed. It's designed because of to award the bid to the most responsive or advantageous bidder, which could be the lowest bidder, but would not always be the case. And so we're just recommending that that award letter be updated and standardized to reflect the correct process. We also noted that there was no vendor performance to assess the quality of the work of the vendors related to the RFPs. We noted that that was a state requirement that was not being done, and so we're just recommending that that process be implemented by the purchasing department. And we have Ms. Wagner, who is the purchasing manager, who responded to our report. There's no questions.
No, please.
Our next audit is the audit of the Public Works, Streets and Drainage Division. And Public Works is responsible for maintaining and repairing city streets, alleys, drainage, structures, canals, roadside ditches, mowing, and litter control. It's also responsible for small street repairs. Our scope included the years 2014 to 2019. Most of the work that Streets and Drainage does is through service request, and annually they averaged about 5,000 to 6,000 service requests. Of note, about at least 90% of those service requests were done during the years that we looked at, except for 2019, about 80%. This shows the type of calls that Streets and Drainage receives. Pothole patching is the most requested type of service, averaging about 20% of the calls, and you can see the other types of service requests going down from there. Again, most of the work is initiated by service calls from citizens or other departments. It's primarily a paper-based system that manages the workflow process. What we're recommending is that there be technology instituted to manage their operations. We recommend a new work order system, and we thought that that would reduce the duplication of effort. It would automatically calculate the total cost of repair. It would better help in determining the performance metrics that are being used. It would provide more transparency in the workflow process, and it would help to prioritize the incoming service requests to determine which one should be addressed first based on needs and risks to the city. So basically, we're just asking them to move away from the manual process into a more computerized process to provide more transparency in what they're doing. We also recommended a follow-up on the service request. We actually went out and looked at the work performed. We noted in all cases that the work was performed. However, there was no really follow-up system on the current condition of the service request. We noted, for instance, in one instance, the work that was done for a pothole patch was worn out, and we're just recommending that, they institute somewhat of a follow-up process. We noted also that there was some issues with inventory control. The forms that they used were not being completely filled out, and that resulted in a lack of accountability for the inventory. There was some missing inventory it would be hard to identify what happened and how it happened. Standard operation procedures, a standard finding that we write in many of our reports, was not completed, and so we're recommending that they update those in accordance with the policies that they're following. We also recommended a safety program be instituted for the department, as well as employee training to make sure that employees are proficient in the type of training, in the type of equipment that they operate. We were told that they did have on-the-job training, but we thought a more formal process would ensure a proficiency in the type of equipment that they use, such as backhoes, loaders, and that type of thing. And we have Mr. Norman here, who is the department director, to respond to any questions.
I have no questions. Thank you, Ms. Stewart.
The next report that we want to review is the Solid Waste Division collection process. As we all know, solid waste collects trash for approximately 60,000 households within the city. The first finding that we note is that the lack of funding prevents an equipment replacement schedule, but management should keep up with the operational costs to know which are requiring higher maintenance, and therefore those that should be put at the front of the line for replacement. We also noted that the collection routes were outdated, that they had not been updated since the 1980s, and with the change in the maybe geography of the city, they should look at looking at the collection routes for better collection precision. We noted that the trucks were not equipped with GPS, and we're recommending that they install that to help with complaints, possibly with customer pickups, driver accountability, and safer driving habits. Last but not least, we noted inadequate monitoring of fuel cards that resulted in significant stolen fuel by an employee and another suspect. One of the things that we did do was go out and observe the collections for a couple of times. Some of the things that we noted in violation of the ordinance for solid waste, we noted some items that were being picked up by curbside collection that were better suited for the bulk collection, such as sofa and mattresses. We noted that there was no limit specified for the bulk collection. In other jurisdictions, we did see that they had limits in terms of cubic yards that they would pick up for the bulk collection. We also noted that in some instances, citizens put out bulk items under mailboxes, by mailboxes and under trees that the ordinance specifically noted should not be placed there. In terms of curbside collection, one of the things that the ordinance requires is that waste be properly contained. We observed in several instances that that was just not the case, and so with that, it requires the collection workers to go in and pick up this trash, and it just slows down them from getting their work done in a timely manner. That was one of the issues that we observed. We also pointed out that the stickers, citations, and fines were not issued, although the ordinance does specify that that could be done for those violations of the city ordinance. One of the things that we were told is that the violations were not being issued was because the ordinance did not specify who was actually responsible for for issuing those citations. And so we're just recommending that the ordinance be updated to specify who is actually responsible for issuing the citations, that the department maintain a record of the citations, that they review the ordinance to see if there's a limit, could be a limit for bulk collection, and that they look at the knuckle boom truck for better efficiency. One of the other things that we did note is that solid waste is, according to what we researched, was the 5th most dangerous job that there is, and so safety and training should be paramount. We observed in several times that we went out that the PPE was not being worn at all times. We observed a citizen assisting in throwing trash into the packer, which we thought was a liability issue. We also noted again about training and that not being clearly specified. And so we're just recommending that to ensure the safety of the workers, that they follow the requirements, that PPE equipment be worn, that standards in terms of what's required by that policy, if that needs to be updated, that management look at into that and update those. A policy that citizens should not be engaged in the disposal of waste into the packer, and that safety and training be stressed for the department.
Thank you, Ms. Stewart. Has the administration implemented the GPS or route review recommendation in this report? Gary?
No, sir, at this point, we have not implemented either one of those. The cost of GPS is probably in the neighborhood of $20,000 annually for the cost for the GPS, which we don't have budgeted at this point.
Is it $20,000 for all your trucks or for one?
No, that would be for all of them. They run about $30 a month, and we're looking at neighborhood of 48 trucks, but well, actually it'd be a little bit more than that. But
Do you agree with the internal auditor's assessment that that would be a useful tool for driver accountability and just asset management?
I mean, absolutely, I think it would. I mean, we do have GPS on a number of our trucks and streets and drainage, but we have not taken that step, and maybe, with the hopefully with the purchase, coming up with new trucks, that would be a good time for us to do that.
I'd like to see that worked into your budget for 21. $20,000 is a phenomenal amount of money for that additional technological ability. So I hope we can work that into the budget that's presented to the council. What about route review? It makes sense to me that we ought to be reviewing routes as our city changes and our population declines.
Right, it is something that we agree that needs to be looked at. We've got kind of a unique situation with the city of Shreveport with all of the things that Lennis brought up. I mean, we agree with as far as our issues with bulk pickup. We've got other things that complicate our garbage routings, such as backdoor pickup. We've got about 2,000 people that we do backdoor pickup on, which is a time-consuming effort.
20,000?
No, 2,000.
Oh, 2,000.
Excuse me, I misspoke it for. So we have some things that do complicate it. We've got a scenario where we don't pick up garbage every day. We do Mondays, Tuesdays, Thursdays, and Fridays. And with the load that we have, that Wednesdays is a good day for it. Gives us a chance to catch up, especially with an aging fleet, to work on trucks and things of that nature, to try to keep enough trucks operational to be able to get stuff picked up. But it is something we intend to do. We need to work on our efforts to, for fines and things of that nature. We think the environmental court's going to be an effort there.
We're short on time for this committee meeting, but I'll just say, Mr. Norman, how much I appreciate your work and your department's work. I think you do an excellent job. I do hope that we can address the GPS recommendation this year, because that's something that I think would really be very helpful to management of the fleet and of your employees, and the cost is very small. So thank you very much.
Yes, sir.
The only other remark I'll make, Ms. Stewart, is that I want to compliment you again for identifying the fuel man card fraud. Your department identified a relatively small amount, but with the help of the United States Attorney, the full scope of that fraud has come to light. That would not have happened without your staff, and so thank you again for your good work. We've come to
I'm good.
Okay. We've come to 1:30, which is the end time for this committee meeting. We'll address the final report at a subsequent Audit and Finance Committee meeting, unless there are further comments from the administration. Mr. Whitehorn?
No.
Okay, then we're adjourned. Thank you all so much.